Let's start with the weekly. I believe we have an updated weekly. The most important or most relevant is the target on this weekly chart. We know that the market is moving, doing a head, and that it's going to be a wave C. We'll probably have a double head in order to accommodate a lengthier wave C in green here than a wave A. We have, of course, high degree A and B, and then we're doing now that C. Internally, we have a 1 and a 2 where it's not showing, a 3, 4, and a 5. Retraction 1 or retraction leg A during the Bank of Japan's release should take us to 61.8%. We have already now taken 78. We must take 78.6% out because this is a retraction. If you're really seeing resurgence of yen strength against the dollar. So now the levels become more relevant. Now we can understand that 154 is a resistance. Even if we are now today moving a bit higher than 154, we're not going to 160, we're not going to 161, we're just going to 155, we're just going to 155.50. This is a resistance zone. And the next target, the one that we should be aiming for on Wednesday, is 149. Of course, if we try to strike 149, we can get 148. But we have things now in better perspective. Remember that target 146 that we keep hoping to take is a bit out, a bit far. It's 50%. So 145.50 is 146. But in reality, it's 61.8 that is the most probable target, 149 and 148.50. All right, let's take it to the dailies. I believe this is today's chart. This is the kind, very close, of course, to today's chart. This is the kind of trigger that we are getting on the daily. All right, of relevance here is the internal structure, because if you're going to go all the way down to 149, remember, we're just saying we're going to 149 or 146. 146 is showing right here. This level is 152. We're going midway between the two necklines. The labels here show this is the last growth segment. Let's go over the labels. We have done a head level at that point. It shows into a 1 and a 2 in English labels in brackets, a 3 and a 4 at that point, and a 5. That 5 has done a 1 and a 2, 3 in white brackets, so 4 here, and a 5. We have taken out level 3. This is level 3. We have taken out level 3 definitely. That's the market here at 153.75 at that point. Level 1, we must be going to level 1. Probably this is the earliest bounce, of course, level 1. We'll have to check that when we go live, but that level 1 is around 149, 148.86 is showing right there. Refer to that 1 in white. Very, very possible target. Actually, of course, it depends on what the Bank of Japan does on Wednesday, but very likely because it's the top of a level A. So we get to see 149, we get to see 148. From current levels or from the short where we're going to take it, let's say it's 155, all the way down to 149, we're looking at 600 points, that level 1. Is it possible to go deeper? Yes, sir, it is possible, of course, to go deeper. There's a level 3 here. That level 146, which we keep aiming to take, is an internal level 1. If I switch all the labels, if that leg 1 drops back here, it's likely we have a 1 and a 2, a 3, internal 1 and a 2, internal 3, internal 4, always bouncing at internal level 1s. So that 2 bounces at internal level 1. That 5 bounces at an internal level 1. All right, so I can have a 1 and a 2, internal 1, 2, internal 3, 4, internal 5. I should go to level 1, 146, to bounce and do another wave 5. On the pretext that the Bank of Japan will not really, will just do a one rate rise, and it is the Federal Reserve that will have, that will still continue to hold rates higher until the end of the week to make absolutely sure that there is no inflation resurgence. Anyway, we don't have to think far ahead. All we need to focus on is Bank of Japan intervention. It's the day on Wednesday. Target is top of a level 1, top of a level A, shoulder level. Target is 148 or 149. Target is top of that level 1. 149 is really 148.86. 148.50, top of that level 1. Let's take it to actual trading. This is delayed. We're just showing it to remind ourselves that we are shorting the shoulder levels. Shoulder levels here go as high as 158, 158.50. All right, so Is it possible to get 158.50? Only if the Bank of Japan does not raise rates. The bank can surprise and not raise rates. Going into the Federal Reserve meeting that night after the Bank of Japan's meeting early morning would mean that the market will begin to discount a stronger dollar, move higher to 158. Then Mr. Powell comes in. He is not really hawkish dollar. He is rather focused on hawkish equities or the stock market. We get reversal of, let's say, of the agenda, meaning instead of having a strong yen and a weak dollar in the morning and then a weak yen and a strong dollar in the evening, we have a strong dollar in the morning and a weak dollar in the evening. During Mr. Powell's speech, we get to show these high levels. Is this possible? It is possible on, again, weakness out of the Bank of Japan's meeting. Let's take a look now at today's 4 hours, what we're seeing right now. This goes on into, into the meeting by the Bank of Japan. All right, so according to what we're seeing on that 4 hours, we have a shoulder. We should be getting the same shoulder or a smaller shoulder, depending again on what the Bank of Japan does on Wednesday. If they're not hawkish, market rises to 158. All right. If they're hawkish, market crashes to 148. Just took a look at this over here showing 147.80. Let's take a look at it in more detail. We see the same shoulders. We see now a more updated price action. The market is doing that bounce in which we did the long. Okay, so according to this, we're doing an A, B, and a C. The labels are all correct. We have a dot 1 here, a dot 2 that's not really showing, a 1 and a 2 in green labels, a 3 and a 4 in green labels, a 5, dot 3, A, B. We're just doing 4, C. All right, so we take the long and wait until move out of the market before, of course, the Bank of Japan meets. Will the long take us to 157? We'll do the internal projections when we go live, but unlikely. The long can take us to 156. We just checked projections. We're doing 155.50. Remember earlier we did check projections. We're doing 155.50. I believe we go out of the long at around 155.50. We attempt during Mr. Powell's press conference to short 156. We're getting a more dim shoulder, a lower shoulder than these two shoulders. And the market crashes to 149. We now understand the relevance of that target. 149 has been established on the weekly, has been established on the daily. We're very sure about it. May even go lower to 148. Again, all this is conditional that the Bank of Japan is hawkish the yen. All right, so our basic focus or basic strategy, do the long now. If the market doesn't really move much higher, it means that the market is afraid of what the Bank of Japan is going to do, or already there's leakage of information that the Bank of Japan is going to increase rates, and therefore nobody wants to long against the yen. Instead of saying heads and shoulders, you're saying double heads. Is this possible? Not really, but if you have a very dilute shoulder, the double shoulders here become really a head. Or it's possible we get to do the break the neckline before rise and do the shoulder levels. So if the market doesn't move higher, like I was saying earlier, there is the perception that the Bank of Japan is going to be very strong, very hawkish yen on Wednesday, and therefore we'll wait, close along, of course, on very little profits at that point, attempt to short 154.50, 155. That C becomes very truncated at a level 3, rejects. You have to keep focus on the levels so that when we get the trigger, we know where to place the stop, because the market will be fast, will be moving suddenly. We just have to sell market. And at that point, assuming the market doesn't rise above 154.50, your stop is just above level 3 here. And you take it down to hopefully 140. We will take it down to 149, right? Now we understand again the relevance of that 149. End of the day, we attempt to buy 148, 149. Remember, there's going to be a bounce. Dollar is going to be very oversold. Even if Mr. Powell is dovish, it will bounce. If Mr. Powell is hawkish, it will do a good bounce. We go to 156, do something like 700 points, 800 points. over, of course, the course of 2 days or so. If Mr. Powell is not hawkish, at least we do the neckline 154. So this first scenario. Second scenario is we have a hawkish dollar today. Things erupt in South Lebanon, for instance. We get even more hawkishness. We go to 156, we go to 157. There is expected to be, can be flare up in the conflict in 24 hours. This is, of course, before the meeting by either the Bank of Japan or the Federal Reserve. So yes, we can see 156, we can see 157, and the long is valid. The long is good to take because of the fundamentals. Let's take it now to trade management. We just remind ourselves of the cap by the Bank of Japan. The bank has driven the market from the head level, 162, to the shoulder level, 158 at the most. And we're looking at this chart since, I believe, last Friday. Take it now to trade management on the 15 minutes. This is what we're seeing today, and this is what we're actually trading. This is very close to today's 15 minutes. Actually, this is today's 15 minutes. And this is the strategy, the principal strategy that we're going to be trading. We could be mistaken, so please, everybody would need to do their own due diligence. We know we have finished level 3. We should be attacking level 3. That red neckline. 156. If we get there, we don't really have to attack level 3. We just attack 155.50. All right, all this becomes a dot 4. We're saying a dot 3, we're saying a dot 4, and then we are going to attempt to sell at 155.50. The long that we're doing right now is, of course, an A, B, and a C. We've seen these 5 internals already. So we do the long, try to get out before the Bank of Japan's meeting, wait for the press conference, wait for the release, have a sell stop, because the release will show that they're going to increase interest rates by probably 0.1%, and therefore just before the release, we must have sold market or have a sell stop. We'll look at this in more detail. So simply having a sell stop, meaning if the market goes all the way to 155.50, you want to have a sell stop at 155. There is slippage, so your entry at 155 can be filled at 154. All right, seriously. And therefore, it's better just to sell market before the release. Just sell the market before the release. It's a bearish market anyway, and even if the market, let's say the bank does not increase rates, how far higher can it go? I mean, we can just sell a half size and hold it, because if they do an interest rate release, you get to see this. If they do an interest rate increase, you are going, of course, to 149. You get to see this very fast. Right, end of day, during FOMC, we're here. Either it's 151.67, it's 149, it's 150. The market would have already crashed because of the action by the Bank of Japan. We do the long while Mr. Powell speaks, probably, if we get a trigger as Mr. Powell speaks. Probably if we see resistance 2 or resistance 1 on the hourly, probably resistance 2 on the hourly time frame, or somewhere between resistance 2 and resistance 3, we do a half size long, add to it while Mr. Powell speaks. You go to back to 155, 154.50, maybe even 156. Remember, in actual market projections, the market is trading these cycle structures. We're buying not 152, maybe even lower, 150 and 149, back to 156 this year, 158. You're just doing the shoulders. Probably more tilted to the downside, more bearish, but the bounces will be coming. Definitely valid because of the shoulder structure. All right, let's now just take it to live charts, just to establish the resistance levels where you'd think the market is going to reject during the Bank of Japan or before the Bank of Japan's release, and what we would consider to buy during the Federal Reserve's release. So of course we have the long right now. It's beginning to move. Not really showing much, but it is really beginning. At least it shows a nice candle structure. The most likely, of course, is midway between resistance 1 and the pivot, something like 155.60. Resistance 1 itself is 157. So going into the Bank of Japan's release, we can just have a half size short at 157, I believe. And I think that's me again, please, I could be mistaken. I think we will need to do a half size short market. At that point, I believe the market will be at level 3, at the 200-point moving average, half size short. You may want to do away with resistance 1, don't have anything there, just have a half size short at level 3, 155.70. Relate this to resistance 2 on the 15-minute chart on Wednesday, right? If the market moves higher and maybe the bank is not really increasing rates strongly or something else has been said, and the market will top out, say, at 157, we can add another remaining half size. But our principal entry, I believe, should be at level 3. Target, of course, is 149. Support 2 here on the 2-hour chart. 148.76 is showing right there. Same entry, end of the day, FOMC, before or during FOMC. If we get that level before FOMC, 148, 148.50 is somewhere, even if it's a very strong slide, and the market goes all the way to 146, for instance, we will have to do a long entry before the FOMC. You have here 146.32, because definitely the market will bounce. If we go that low, definitely the market will bounce, and therefore we don't have to wait for Mr. Powell to speak, really. You want to keep a sharp eye on the levels, on the hourly, because these are where we engage. In between them, add them, all right? Going into the release, you can want to have a half size, for instance, in between support 1, support 3, 147. Regarding FOMC, of course. But regarding the Bank of Japan, we can either short market before the release, or if you wish to have a third of a size, for instance, at 157, that would also be appropriate. 156, 156.20, close to that level 3, as close as possible to that level 3.